Those who can ululate, you can ululate and whistle. The President of the Republic of South Africa and the President of the Republic of Kenya. Your Excellencies, we will now sing the national anthems of both countries. Thank you very much. You may be seated. His Excellency, the President of the Republic of Kenya, Dr. William Ruto. His Excellency, the President of the Republic of South Africa, President Cyril Ramaphosa, Ministers of both the Republic of Kenya and the Republic of South Africa, High Commissioners of both the Republic of Kenya and the Republic of South Africa, CEOs, managing directors, and senior executives of companies from both countries, permanent secretaries of the Republic of Kenya, and the Director General of the Republic of South Africa, officials of the two governments of Kenya and South Africa. Ladies and gentlemen, distinguished guests, welcome to the presidential session of the Business Forum. The Business Forum is an integral part of the President Ruto's inaugural state visit to South Africa. It is through this last session that our heads of states will be taken into confidence by the private sectors on the proposals that you deem fit to take our bilateral and regional economic and commercial relationship forward. We have spent this morning at the official talks that were led by our two presidents. Each of our ministers had an opportunity to table progress on commitments made as well as emerging issues that affect our two countries as well as the greater continent. Chief among the issues were matters impacting companies in their trade, investment journeys in our respective countries. During the last state visit of 2022 in Nairobi, Kenya, the Business Forum directed that we jointly undertake concerted efforts to increase the volume of trade and levels of investments between our two countries. These commitments underpinned by the aspiration to improve the lives of our citizens. It is my honor to invite to the stage two companies who will do exactly that. The two CEOs will share testimonials on their experiences of doing business in each other's territories. Mr. Rugby Keith, the Managing Director of Kibos Sugar and Allied Industries, will begin, followed by Mr. Sim Shabalala, the Chief Executive Officer of Standard Bank Group. Mr. Chati, you now have the floor. You use this where I am. The other one is for the heads of states. Thank you.
Thank you very much. Your Excellency, the President of the Republic of South Africa, Mr. Cyril Ramaphosa, our President, Dr. William Ruto, Honorable Ministers, High Commissioners, distinguished guests, delegates, ladies and gentlemen, all protocols observed, a very good afternoon. I'm advised that I would like to address the President also in a South African dialect, Da. I mean, Sami Bona, Hamjambo. Thank you. My name is Raghbir Singh Chatte. I come from Kenya. I'm the Group Managing Director of the Chatte Group with investments across Kenya and South Africa. For me, today's discussion is not simply about trade between Kenya and South Africa. It's about the bigger question. How do we build an Africa that creates its own industries, finances its own growth, and provides opportunity for future generations? Our own journey reflects the strength of this partnership. We have benefited from strong collaboration with South African institutions, including the IDC and the Standard Bank Group. As a group, we have developed one of the world's most integrated circular economy models in the sugar industry. We are a global leader in that space, demonstrating that economic growth and environmental sustainability can go hand in hand. Your Excellency, 12 years ago, we invested in South Africa, in Mpumalanga, where we started with a macadamia farm. We have expanded the farm into a processing, cracking, and a modern nut cracking facility today. We are amongst the large farmers in this country in the macadamia space. We employ over 300 South Africans in that business. This is strengthening South Africa's position in the global market. And with that, we bring experience from the macadamia space in Kenya. Kenya being the third largest producer of macadamia in the world, and South Africa, the leading producer of macadamia in the world. Last year, Your Excellencies, we invested in Gladys Sugar Company in KwaZulu-Natal, a company that was in business rescue. We were not simply investing in the sugar mill, we were investing in the livelihoods of more than 500 people and over 140 farming families. Behind every job is a family, a child, a school, a community that depends on that economic activity. The South African sugar industry has tremendous potential, but unlocking that potential will require continued investment in modernization, efficiency, and sustainability. Kenya's experience in adopting biomass-based energy systems has demonstrated how innovation can improve operational performance while reducing environmental impact. Creating valuable opportunities for knowledge sharing and technology transfer between our two countries. At Gladys Sugar, we are committed to this vision and are investing to build one of the most modern, efficient, and sustainable sugar operations in Southern Africa, and that supports South Africa's economic objectives, strengthens industry, competitiveness, preserves jobs, and contributes to a more resilient and environmentally responsible future of the sector, and reducing the carbon footprint in sharing the vision of South Africa. Your Excellency, today the Chathe Group has invested approximately 3.5 million South African rands in South Africa. These investments demonstrate a simple truth: African capital invested in Africa does more than generate returns. It creates jobs, develops skills, strengthens communities, and keeps value on our continent where it belongs. Your Excellency, we greatly appreciate the visa waiver that you offered during your last visit in 2022 to Kenya, and the travel between the two countries became a lot easier. We deeply appreciate this and thank you for that gesture. But to increase prosperity amongst the two nations, I respectfully request you to further support the structured skills mobility through the gazetting and implementing of the Trusted Employer Scheme. We need to improve on the transfer of skills, where we are restricted through not a proper structured way of bringing skill cross-border. Enabling the transfer of specialist expertise in these agro-processing will help our businesses a lot. While South Africa also has immense capacity and is Africa's best healthcare destination, they can also export some of their skills to countries like Kenya, and notwithstanding that South Africa can also exchange talent with Kenya in the field of sports. South Africa is the world champion for rugby. Kenya is doing well in the rugby sevens. In cricket, you do too well. Kenya does extremely well in athletics. There is immense scope to exchange this talent as well. In the global economy, capital follows talent. If we can facilitate the movement of skills, expertise, and innovation across our borders, we will accelerate industrial growth and strengthen Africa's competitiveness on the world stage, and transfer of skills will help both ways. Your Excellency, in the sugar space, we have been long awaiting the gazettement of the ITAC dollar-based reference price for sugar, and that has taken inordinately long. I'd like to very respectfully request for the urgency that it needs, because it has put the industry into some turmoil, and we are looking forward to that gazettement. This will create investors' confidence to deploy capital, create jobs, and commit to long-term sustainability of the industry. In the macadamia sector, South Africa and Kenya are global leaders, producing some of the finest nuts in the world. Yet our farmers and processors are not consistently rewarded with the premium value that this quality deserves. By expanding market accesses, reducing trade barriers, and diversifying beyond traditional export destinations in high-growth markets such as India and the Middle East, in which South Africa can take its advantage on the BRICS position. It's as a member of the BRICS. This can strengthen price stability, enhance foreign exchange earnings, and unlock greater value for our producers. Kenya has acted immensely strong in also banning export of all raw macadamia or nut in shell. So processing and value addition is done in the country, and more jobs are created here. Jobs are not exported. And South Africa, being the leading producer, I propose should follow and consider such position so that processing can happen here. When there are adequate processing facilities, it will leave and create more jobs, more value addition, and more foreign exchange. Your Excellency, the TFTA between COMESA, EAC, and COMESA and the SADC countries is in force since the 25th of July, and it should be implemented and used as a stepping stone for the African Continental Free Trade Area. Presents a once-in-a-generation opportunity to accelerate industrialization, intra-Africa trade, and sustainable economic growth. To fully realize this vision, governments, financial institutions, and the private sector must work together to empower African entrepreneurs with competitive access to capital and investment. The partnership between Kenya and South Africa exemplifies what is possible when African nations collaborate, creating jobs, strengthening food security, developing rural communities, and building global competitiveness. Africa's future prosperity will be secured not by exporting opportunity, but by investing in African enterprise, African innovation, and African people. In closing, I am reminded of a powerful observation. Let us build industries, create wealth at home rather than opportunity abroad. Africa does not lack resources, talent, or ambition. What Africa needs is great partnership, greater investment, and a greater belief in itself, and free of movement of our skilled talent across continents. If we invest in Africa, trust Africa, build in Africa, there is no limit to what our continent can achieve. God bless Kenya. God bless South Africa. Thank you very much.
Thank you, Minister Langula. Your Excellency President Ruto, Your Excellency President Ramaphosa, Cabinet Ministers, and Ministers of the and members of the diplomatic community. I'm just a banker, I'm not good at this kind of thing. Thank you very much. Colleagues and friends, karibu sana, reale amulela, a hearty welcome. As well as it being a great honor, it is a tremendous pleasure for me to be here. And it is a real treat to follow Mr. Chate, who is a valued customer of the Standard Bank Group. Kenya is responsible for one of the most remarkable experiences of my professional life. In 2023, the IMF fall meetings were held in Marrakesh, in Morocco. Kenya's finance minister and central bank governor addressed a meeting with international investors, which had been organized by Stanbic Kenya and the Standard Bank Group. The Minister and the Governor explained Kenya's fiscal and monetary policies and progress. They did so with great excellence and sophistication, a veritable masterclass in professionalism and transparency. Literally within minutes, the price of Kenyan bonds shot up, and today, Kenyan bond yields are 20% lower than they were 3 years ago. The recollection is made the better for the fact that Standard Bank and Stanbic Kenya continue to partner with the Republic of Kenya to meet its financing goals. Last year, for example, in partnership with Citibank, we arranged a new issue for the sovereign valued at $1.5 billion. This story illustrates so many good things: the value of global engagement, and above all, the power of African partnerships. Kenya is at the heart of the East African community, one of Africa's most dynamic regional blocs, connecting trade, infrastructure, and finance across East Africa. South Africa plays an equally central role in Southern Africa as the anchor economy in SADC. What makes this partnership especially powerful is that the two countries are not operating in separate spheres. They come together through COMESA, creating a direct economic corridor that links the EAC and SADC regions, with Kenya and South Africa at the two bookends of Africa's most important north-south economic spine, Mombasa to Cape Town. Both of our nations are also active partners in the Africa Union and in the world's largest free trade area, the African Continental Free Trade Area. Free trade areas allow bigger markets, deeper value chains, and larger gains from trade. It is no coincidence that the EAC is consistently Africa's fastest growing sub-region. Looking continent-wide, the AFCFTA has the potential to make a similar difference on a continent-wide scale. Africa's intra-regional trade is only about 17% of our total exports, compared to 59% for Asia and 69% for Europe. So, we have a lot of room to expand intra-Africa trade and to benefit from the resultant economic growth. It is therefore reasonable to ask, what is full implementation? What does that imply? Again, Kenya and the AAC lead the way here. I have two wishes, if I may, for Africa's trade. First, that we adopt an EAC-style system of customs processing for the whole continent. Second, as Mr. Chatter has just said, visa-free travel for African business leaders within Africa. The Kenya-South Africa relationship is, of course, exemplary in this regard. Thank you, Your Excellencies. Talking of travel, we hope to see more Kenyan tourists in South Africa, and South Africans enjoying the attractions of Kenya. Both countries have so much to offer to leisure visitors, and tourism is a powerful creator of employment. The Standard Bank Group is guided by a simple corporate purpose. Africa is our home, we drive her growth. We opened for business in Kenya in 1992. Stanbic Kenya today has 1,222 employees, 44 branches, and 315,000 clients, and is led by a very distinguished Kenyan financier, the inimitable Dr. Joshua Oigara. As these facts make clear, we are here for the long haul, and we take pride in supporting our clients through decades of economic cycles. Of course, our respected rivals in Kenya and Africa, private financial sector, are equally dedicated to Africa's development. But we must say that we find Kenya's rapid, sustained, and increasingly diversified growth extremely impressive. We're equally impressed by Kenya's close and highly efficient links with the European, the Indian, and the Chinese economies, and to the broader global trading systems in general. Over the past 3 decades, we have worked with many Kenyan clients and partners. it is no secret that we intend to keep growing our business and our contribution in your country, Mr. President. But here's the obvious question. In graciously hosting Stanbic Kenya and the wider Standard Bank Group, what's in it for Kenya? First, a Kenyan-led team under Dr. Oigara that is utterly committed to supporting the Kenyan economy and helping Africa drive her growth as a whole. Second, the largest balance sheet in Africa and deep Africa-wide expertise in every kind of financial service. Third, strong links between Africa and all the major global financial centers. Taken together, we believe that these assets can help Kenyan firms and households to save, invest, trade, and build wealth with confidence. Indeed, our group has experience in all of Kenya's national priority areas: infrastructure, energy, manufacturing, agriculture, and of course, Kenya's remarkably dynamic digital economy. Specific examples include our financing for the expansion of the Lamu port, the Lake Takura wind farm, the Kenyan pipeline, Line 5, and on the digital side, Safaricom, and for Kenya's power e-billing system. We also bring to Kenya the ability to mobilize development finance from across the African continent, and indeed the world, and the capacity to attract funding from peer commercial banks from all continents. Among our strongest partnerships is our strategic partnership with the largest bank in the world, the Industrial and Commercial Bank of China. Together, we mobilize long-tenure, competitively priced capital for large-scale infrastructure, energy, logistics, and industrial projects. A prominent example is our work with the ICBC to support the construction of the Nairobi Expressway. Your Excellency, I have to say that we particularly commend the establishment of the National Infrastructure Fund, a thoughtful and forward-looking initiative that has potential to fundamentally reshape infrastructure financing. Beyond providing a sustainable financing platform for strategic national projects, we are confident that the fund can serve as a powerful catalyst for crowding in private capital, pension funds, development finance institutions, and global investors. You can see why, Mr. President, Standard Bank and Stanbic, as well as our competitors, I must mention, want to be in Kenya. It is a winning, innovative economy and a powerful regional with a powerful regional and global position. What about South African businesses wanting to invest in and trade with the remarkable engine of innovation and growth that is the Kenyan economy? Many South Africans already do. South Africa provides around 10% of Kenya's FDI stock, while Kenya provides less than 1% of South Africa's. I'm sure that President Ramaphosa would approve that we would like to see a lot more investment in both directions, and we are here to help with this too. We and our competitors enable South African entrepreneurs and investors to deploy capital in Kenya through deal origination, cross-border banking, and advisory services and risk management solutions. Let me give a sector example. Nairobi, Cape Town, Johannesburg are all cities with very strong fintech sectors, all highly innovative and each complementary to one another. Cape Town is particularly strong in payments, Joburg in fintech bank integration, and Nairobi in financial inclusion and digital neobanks. The potential gains from mutual trade and investment are large, and some cooperation is already happening. Last of all, I want to thank the South African and Kenyan governments for everything that they have done so far to foster excellent economic relations between our two countries. Please be assured that the Standard Bank Group will continue to place the interests of Africa first, at the center of our strategy, and to play our part in driving Africa's growth, including very much the growth of Kenya and the partnership between Kenya and South Africa. Asante sana, Ralebua. Thank you very much.
Thank you very much, Mr. Kathy and Mr. Shabalala, for the experiences of your respective companies. We will now hear from representatives of organized business who have been charged with taking us into confidence about the deliberations of the day. They will also further share the resolutions that business has committed to as part of their contribution to improving the levels of trade between our two countries. Dr. Stravos Nicolaou, in his capacity as a member of Business Unity South Africa, BUSA, will be the first to offer us some reflection. He will be followed by Mr. Jas Bedi, the chairman of the Kenyan Private Sector Alliance, KEPSA. You will please follow each other like that. I will not come back, just like married couples. Thank you.
President, that wasn't deliberate. And, I got so distracted by Minister Lamola. You need to pick your ministers better, because he walked in here today and he said to me, my team won the league under dubious circumstances. So I got very distracted by that comment. But Excellencies, President Ramaphosa, President Ruto, good to see you again. Honorable Ministers, Excellencies, High Commissioners, distinguished business colleagues, ladies and gentlemen. It is indeed both an honor and a privilege for me to join you here today on behalf of Business Unity South Africa, which represents around 80% of the South African private sector. This is indeed a pivotal moment in the strengthening of our two countries' economic partnership. Equally today, ladies and gentlemen, is a defining moment for our region and indeed for our continent. Our integration into the global economy, whilst commendable, also makes us vulnerable to volatility and global economy. Countries are repositioning themselves around industrial capacity, energy security, critical minerals, technologies, and regional market access. Our total merchandise, colleagues, between our two countries amounts to around $617 million US dollars. These are 2024 numbers. And South Africa has the lion's share of that for the moment, President Ruto. We export $567 million to Kenya, and in return, as South Africa, we import $50 million. Ladies and gentlemen, you would be aware that the South African export basket, however, is composed of both raw materials, intermediates, and finished products. Finished products in the automotive, steel, petroleum, and machinery sectors. Kenya, on the other hand, exports flowers, precious stones, machinery, spices, and vegetables to us. That's why we are so healthy. We eat Kenyan vegetables. We must, in taking consideration of the trade patterns, strive to deepen our trade and investment relationship in a way that diversifies our economic partnership while narrowing the trade deficit I discussed earlier. So we're not shy as South Africa of narrowing the trade deficit as long as we grow the overall trade. As organized business, we are firm of the view that the building blocks of penetrating global markets lies very much in increased bilateral and indeed regional trade and investment. Where do the sectorial opportunities lie? In no particular order of preference, in agro-processing, manufacturing, financial services, technology and innovation, and dare I incur the wrath of my sector, let me add pharmaceuticals to that as well. Now, it's no coincidence that I think we have, just speaking of the pharmaceutical sector, the pandemic preparedness champion of the continent, President Ramaphosa, and the AU pharmaceutical localization champion of the continent in President Ruto. Now, the two together are overwhelmingly powerful, and I think the fact that you're meeting here today presents a significant opportunity for the pharmaceutical sector. Now, let me make the point quite strongly that the trade between our economies is underweight at this point in time, but has significant room to grow. It should concern all of us that despite the Africa Continental Free Trade Area, the AfCFTA, and the TFTA, we have not capitalized on lower trade and investment barriers. This is why earlier today we had a number of workshops where we considered how we are going to enhance and grow trade, investment, commerce, and business between our two countries and more broadly between our two regions. I'm not going to go through the detail of this because it will all be subject to public record, but we looked at this in three clusters. The first is agricultural value chains and cross-border trade. We grappled with the many market paradoxes and supply dynamics, such as, for example, Kenya is a top milk producer, yet its demand exceeds supply. South Africa, on the other hand, leads the continent in milk production. We considered export profiles in agro-processing and looked at where these complementarities lie. The analysis was that significant growth and co-production opportunities sit between the two countries and the two regions, but require trade facilitation and advocacy in order to get us to a more enabling environment. So that was the first working group. The second covered manufacturing value chains, trade and investment. And here there was an overwhelming feeling that we need greater attention to regulatory and policy alignment. In fact, if I'm going to leave any soundbite from today, it should be that our industrial ambitions on the continent need to be matched with regulatory speed, and South Africa and Kenya can take the lead on that. Infrastructure and supply chain integration was a subject of extensive discussion, and strategic focus needs to be placed on co-investing in critical infrastructure, deepening industrial value chains and sharing value chains, for example, in the automotive sector. Our markets are inefficient, and we need greater attention and focus on market efficiency, and also how do we leverage the FTA through aggregated volumes naturally will give us an opportunity to do, I know, something that President Ramaphosa is very passionate about, which is pooled procurement on the continent. In fact, he did that in 2020 at the outbreak of COVID. Now, let me start ending off, because my brief and my mandate was to say, well, how do we take, as organized business together with our governments, how do we take these discussions forward? And I'm going to just highlight 4 or 5 very brief points. The first is we need to address the barriers to entry. President Ruto, I liked what you said 2 weeks ago in Nairobi when you hosted us with the other 37 heads of state. You were very frank. You said, I'm not interested in long speeches. Tell us what you, the business people, want. in order to deregulate where necessary so that we can improve investment. So we took those words to heart, and we need to pay attention to fragmented regulations and fragmented markets that stifle trade and investment. We need to work very hard towards standardization. We need to harmonize standards between SACU and the EAC, and we need to implement more friendly tariff requirements. We have not capitalized on digitalization. We need to modernize and digitize, for example, customs procedures. There are many other regulatory areas where I think digitalization can make a massive difference. We need to up the ante on trade facilitation services. We need to better utilize our business chambers to issue operational tools like rules of origin certificates and many other regulatory requirements. Funding and partnerships. We need access to resource pools through development institutions, such as our own RDC here in South Africa, specifically seeking to increase continental exposure through partnerships to unblock various bottlenecks. Action steps in closing: align standards, digitize customs, review tariff structures, enhance partnerships and value chain integration, such as, for example, we can initiate vaccine co-development and co-partnership, something we would like to continue conversation with you on. We need to share manufacturing value chains. We need to aggregate procurement, not only for economies of scale, but also for pooled procurement. We need to facilitate funding, and particularly through securing institutional funding. Lastly, we view Kenya as a South African organized business formation as a significant opportunity and potential for all South African businesses. And in particular, we need greater collaboration between our two business communities. South African companies, President Ruto, stand poised to continue working with our Kenyan counterparts, and we implore our governments to continue working towards creating a more conducive business climate in both countries, especially around non-tariff barriers to entry. It's been a great pleasure. Asante. Thank you.
Your Excellencies, Honorable Ministers, senior government officials, all protocols observed. I've been reminded that my time is limited, so I'll be very brief and to the point. Today, I represent the Kenya Private Sector Alliance, KEPSA, which serves as an apex body for the private sector in Kenya. It represents over 2 million businesses, and we bring together a large, small and business associations, multinational corporations with a base in Kenya, and chambers of commerce to shape public policy, drive partnerships, advance sustainable economic growth. The bilateral trade statistics have already been shared by my colleague, and yes, it's true, Your Excellency, for every $1 that Kenya exports to South Africa, we import $11. So the trade disparity is huge, and is something that we need to do about. And as I speak, therefore, it's a unified voice of our businesses that we are at a historic moment in Africa. Your Excellency, in 2008, in Kampala, the 3 regions of East Africa, COMESA and SADC, agreed that we need to establish a fast track to integration. And that fast track was called the Tripartite Free Trade Area, TFTA. The launch of the TFTA happened in 2011, and in 2015, it was signed in Sharm el-Sheikh in Egypt that the TFTA should move ahead. After 14 countries ratifying this TFTA proposal, on 25th July 2024, so it took almost about 15 years, the COMESA SADC EAC Tripartite Free Trade Agreement has been entered into force. However, the business has not really progressed. Even after the ratification of 14 out of the 29 member states, we have a combined population of 800 million people, and we have a total GDP of 1.9 trillion. The TFTA is now Africa's largest free trade area by geographical size, spanning the entire eastern, central, and southern corridors of our continent. Kenya and South Africa, the anchor investments economies of East Africa and Southern Africa respectively, both have ratified the TFTA. This places a special responsibility to our two nations to demonstrate that the continental integration is not just a political aspiration, but a commercial reality. Your Excellency, there are certain issues in the TFTA. 90% of the tariff book has been agreed upon, but there are certain issues on the rules of origin, which I'm sure bilaterally the two countries today can agree that we should move ahead so that we can actually show leadership on the continent, because the TFTA is the building block towards the continental free trade area, which, as we all know, is a huge opportunity, $3.5 trillion economy, 55 countries, and 1.4 billion people on the continent. So it's something that we should not ignore, and we should fast track that integration using the TFTA. So let me just therefore, in essence of time, outline 3 concrete actions that KEPSA calls for both governments to deliver within the next 90 days. First, operationalize the MOUs that are already signed and have been concluded. The Quality Infrastructure and Trade Facilitation MOU signed between Kenya Bureau of Standards and SABS. This was signed on the 30th of April 2026 as a baseline harmonization instrument. The Maritime Cooperation MOU and the TIVET MOU must follow. These directly access the non-tariff barriers and the capacity gaps that currently restrict trade. Second, convene a joint technical working group under the TFTA relevant MOUs within 90 days for signature. The meeting minutes of the bilateral agreements should follow with the JT working group and look at all the recurrent bottlenecks. Third is expedite the customs mutual assistance agreement, and we understand SARS requires up to 6 weeks for processing time, and we ask the KRA and SARS to hold technical side meetings and even a side conversation to finalize this instrument. Let me also speak about South African investment in Kenya. As we've seen recently in the financial sector, Nedbank has a strategic acquisition of NCBA, which is 1.4 times the CBA book, and this is a welcome note of financial inclusion into East Africa. Your Excellencies, as we all know, this is a building block that we have to deliver, and we are very fortunate today that President Ruto formally chairs the AU Committee of the Heads of State on the AFTCA implementation. South Africa's automotive export under AFCTA have reached 2.6 billion rand, with Kenya being its anchor market destination. This is a proof of concept. So to fully operationalize AFCTA and to boost inter-Africa's exports by over 80%, we can generate up to $450 billion of trade by 2035. But the future depends on what we do now, with the TFTA as the immediate test case. Let me close with a direct message to our government. The private sector does not ask for favors. We ask for predictability, for harmonized rules, for enforced dispute resolution, and for the political courage to finalize tariff orders and on the rules of origin, which seem to be holding us back. We ask that 90% of the tariff line covered and agreed between the ESC and SACU be implemented without further delay. We ask for outstanding project-specific rules of automotive components, pharmaceuticals, and agro-processing to be concluded within the next 6 months. Ladies and gentlemen, the TFTA is now law, but law without implementation is just words. Let this business forum and state visit be the moment when the TFTA truly begins to work for African businesses, African workers, and African citizens. I thank you, and I look forward to us moving forward in this relationship. Thank you, President Ruto. Thank you, President Ramaphosa, for listening to me. God bless you.
Thank you very much to the two CEOs for your insights and commitment to continue to work with government to resolve some of the bottlenecks in your industries. Indeed, law will become a lived reality with this business forum. I would now like to invite Honorable Lee Kinyanjui, Kenya's Cabinet Secretary for Investment, Trade and Industry, to give his remarks. I hope I have not butchered your surname.
Thank you very much. Your Excellency, President William Ruto, the President of the Republic of Kenya, Your Excellency Cyril Ramaphosa, President of South Africa, my colleague ministers who are here, government officials and business representatives who are all here. Allow me to be very brief in the interest of time, but first to acknowledge that the bonds between Kenya and South Africa are unbreakable. Today, as we were arranging this particular forum, we had difficulty determining who was a Kenyan business person and who was a South African one. And in fact, some of those who came here to speak on behalf of South Africa, we thought all along they were from our side. But that just goes a long way to show the duality of business here. And that also is important because it just shows just how complementary we are. It's like a hand and a glove. Every single finger will fit somewhere. And I think that's the thinking we need to adopt so that business between South Africa and Kenya can be seamless. And I'm happy today that we've had wonderful discussions that our excellencies will be able to emphasize later on. Your Excellency, I also want to say that in the entire continent today, I believe this is the most significant meeting happening between the biggest economy to the east and the biggest economy to the south. And we believe if these two countries align themselves, the continent will also follow. So to our business people, government makes policies, makes pronouncements, but eventually the business has to be done by the business people. And that's why we're here today, to connect the business people from South Africa, from Kenya, and even those who are in between, but also to confirm that South African companies that are operating in Kenya are not perceived as foreign brands. For ABSA that is here, for Stanbic, for Sanlam, all these companies that are South Africa in origin, when we see them in Kenya, we see them like our banks. And even more importantly, some of them are even in our stock exchange, which means we are also part of that success. So as we build, we are not just building for each other separately, we are building together. Allow me also, in the interest of time, to just say that when we bring these two economies together, we have appreciated that to the south we have South Africa and we have Kenya to the east. When you look at the entire continent of Africa, we realize our biggest challenge is the logistics. And on average, if you want to take a product from Mombasa to Ghana or any other country, it takes about 45 days. So that is very long compared to other destinations. So again, we have a role, and we believe in the area of logistics and transshipment, we can do much more to encourage free trade in Africa. Because even as much as we pronounce it in paper, as long as it takes 45 or 60 days to move from one end of the continent to the other, and 10 days to move to other continents, then our business people would prefer to go to those areas. So again, this is an area we'll be working together for the good of all the people who are here. Kenya is known for its fintech, and allow me to say that it is something we take pride, but also believe that whatever we have achieved, much more still can be achieved. And working with South Africa that has a very strong financial sector, we can be able to bring financial inclusivity across the continent. And this is particularly important for driving business across the continent. In conclusion, we also must say that we do business with countries and nations far away, where we need interpreters to talk, where we need to connect with 3 flights before we get there. But for you to get to South Africa, if you wake up and say in the next 6 hours you want to be in South Africa, you will be there. So the connectivity between Kenya and South Africa is the highest in the continent. Most of the other African countries, we are having maybe 1 or 2 flights. Here we are on average having 5 to 6 flights a day. And all those flights are taken up, they are booked. So in short, we are saying there is no reason why we should not be encouraging trade between ourselves and between our people across the entire continent. With those few remarks, I want to say I'm very happy today. We've been able to achieve the highest political approval that we would ever get. And I believe the rest is now for us in government, those of us who have roles to play, and also for the business people to work. With those few comments, allow me to request you to be upstanding as we invite His Excellency, Dr. William Samoei Ruto, to address you. I welcome you, Your Excellency. Round of applause, please.
Thank you very much. Please, let's take our seats. Your Excellency, my brother, President Cyril Ramaphosa, he just explained to me that the correct pronunciation is not what everybody else has been saying. It is Ramaphosa. And I hope members of my delegation have picked it up. Listening to the good people that spoke here, especially those from the private sector, I was finding it difficult whether they were making requests or giving us instructions. Your Excellency, Mr. President, distinguished government officials, esteemed business leaders, ladies and gentlemen, it is a privilege for me to join you in this joint business forum between Kenya and South Africa, a gathering that reflects both the deepening bond between our two nations and our shared resolve to shape Africa's economic future through partnership, enterprise, and integration. I'm informed that today's engagement have been candid, rich, and forward-looking. My hope is that we leave here with concrete opportunities. We've had good intentions, but we must consolidate them into deals. From where I sit, I see two complementary economies with combined power to drive Africa's transformation. Kenya and South Africa stand among our continent's foremost economic anchors. South Africa is one of Africa's premier industrial and financial powerhouses, while Kenya is the gateway to East and Central Africa that is propelled by a dynamic private sector, a thriving digital innovation ecosystem, and strategic infrastructure. Our partnership advances steadily across trade, investment, tourism, aviation, and most importantly, manufacturing, financial services, ICT, and logistics. Today, more than 60 South African companies operate in Kenya, in the banking sector, in insurance, retail, manufacturing, telecommunication, infrastructure, and some of them in real estate. South Africa remains among the leading sources of foreign direct investment in Kenya, even as Kenyan enterprises increasingly venture south in search of new markets and partnerships. In 2025, bilateral trade between our two countries reached approximately $680 million. This is meaningful progress, but it is also a measure of how much potential remains untapped. Kenya supplies tea, coffee, horticulture, cut flowers, and some manufactured goods, while South Africa supplies machinery, vehicles, pharmaceuticals, steel, and industrial inputs. Such complementarity is the very foundation for a deeper industrial cooperation and shared value chains. Ladies and gentlemen, the Africa Continental Free Trade Area is among the greatest economic opportunities of our generation. The platform that will turn fragmented markets into a single, competitive bloc capable of industrializing our economies, attracting investment, and creating jobs. Listening to the private sector actors break down what is going on at the East African community, what is going on at SADC, what is going on in COMESA, and the coming together of the three blocs through the tripartite agreement, which came into force. But now we need greater implementation, acceleration actually of implementation. We have offered to host the headquarters in Kenya of the TFTA so that we can provide momentum and provide the ecosystem for the integration of our markets so that we can unlock this huge potential of 800 million people market. And we build, of course, into the bigger market of the Africa Continental Free Trade Area. Yet, intra-Africa trade remains far below global average. We've been given numbers here. Intra-Asian trade is at close to 60. Intra-European trade is close to 70. Intra-African trade is at 17. The region that has progressed the most in intra-regional trade is the East African community. But we're still way below where we should be. In other words, what the numbers tell us is we are struggling looking for markets very far from our continent, when actually the market in our continent is virgin. But the intra-Africa trade deficit remains far below the global average, as I have said, and that is precisely why partnerships such as ours between Kenya and South Africa matters. Transformation begins right there. Together, our two nations command the financial strength, industrial capacity, entrepreneurial talent, and innovation ecosystem to power not just intra-Africa trade, but the transformation of our continent. We must move beyond conventional trade and deliberately build integrated regional value chains in manufacturing, agriculture, mining, logistics, pharmaceuticals, energy, digital services, and green industrialization. Listening to the actors here earlier, we seem to be speaking in compartments. We must make what happens in South Africa stimulate what happens in Kenya, and vice versa. And policymakers, President Ramaphosa and myself, can do so much. But where the rubber meets the road is at the business level. You are the people who can move numbers. You are the people who can move figures. Changing these figures requires the private sector. And that is why on a state visit like this, it doesn't end with government. We have made it deliberate and intentional that after we have signed all the MOUs, we have agreed on all the policy frameworks, the private sector must be the engine that brings the MOUs, the policies into reality. And I want to say I commend the steady cooperation under our Joint Commission for Cooperation and Joint Trade Committee, which remain vital platforms for resolving trade matters and advancing our shared agenda. We must now ensure full implementation of their outcome so that businesses and investors feel tangible benefits. Today's discussions reveal opportunity across every strategic sector. In manufacturing, Kenya's industrial parks, special economic zones, and export processing zones offer ready platforms for regional partnerships, serving African markets under the Africa Continental Free Trade Area. South Africa's strength in automotive production, pharmaceuticals, mining, chemicals, and steel complement Kenya's rise as a regional production and logistics hub. Let us collaborate boldly in the automotive assembly, mineral beneficiation, agro-processing, and green manufacturing. There are real and tangible opportunities there. In agriculture, our strengths are remarkably complementary. Kenya, a global leader in tea, horticulture, fresh produce, and dairy. South Africa, a master of food processing, logistics, and retail. This is complementary. Africa cannot keep spending billions in importing food while our own farmers and agro-industries stand ready to feed the continent. We must invest decisively in agro-processing, cold chain logistics, irrigation, packaging, and supply chains that connect African producers to African markets. Your Excellencies, Kenya and South Africa are also poised to shape Africa's digital future. Kenya leads the continent in fintech, mobile money, and digital financial inclusion, while South Africa hosts one of Africa's most sophisticated capital markets. Together, we can pioneer partnerships in artificial intelligence, cybersecurity, digital infrastructure, e-commerce, and cross-border payments. You already know that we have a Pan-African payment settlement system that can help business people across our continent not to be stuck with foreign exchange, challenges. That you can be paid in whatever currency, so long as our central banks are connected through the Pan-African payment system that is underwritten by Afreximbank. These are avenues that make trade, business, and enterprises move faster. Kenya is fast becoming a premier destination for global business services and business process outsourcing. With a young, educated, English-speaking workforce, competitive costs, robust digital infrastructure, and a time zoning bridging Europe, the Middle East, and Africa, Kenya is an ideal platform for scalable service delivery. I invite South African and multinational enterprises to make Kenya their regional global business service hub. uniting talent, technology, and market access under one competitive ecosystem. Infrastructure and connectivity remain central to unlocking intra-African trade. Kenya's port of Mombasa and the Lamu Port South Sudan-Ethiopia transport corridor link East Africa and Central Africa to global markets, while South Africa's world-class ports in Durban, Cape Town, Nkura, and Richards Bay anchor trade across the South. United, these corridors can strengthen East-South connectivity, expand intra-African trade under the Africa Continental Free Trade Area, and position both nations as logistics hubs for the continent. Closer cooperation in aviation, rail, warehousing, and cargo handling will sharpen the efficiency of trade across Africa. In this spirit, I commend the strategic partnership between Kenya Airways and South African Airways. Their success will not only connect our people, but also deepen trade, tourism, investment, and regional business integration. Governments can build enabling environment, set policy direction, and invest in infrastructure. But it is the private sector that drives transformation. Africa's future will be written by bold entrepreneurs, innovative firms, and strategic investors willing to back the continent's long-term promise. In a meeting we had in Nairobi, I think we made a very clear appeal to our private sector. Before we look for investors from Europe and America and Asia, the private sector in our continent must take the lead. Yes. You do not expect somebody from thousands upon thousands of kilometers to come to South Africa and appreciate and understand the nuances of what goes on here. It is you, the private sector here, who must take the lead, build alliance, build joint ventures, so that you can help us crowd in investments and bring others to invest in our region. And therefore, it is very important when we meet like this with President Ramaphosa here and myself, that the private sector takes advantage of this meeting so that we can unlock for you the challenges that you experience. And I would advise that it is easier when you have joint ventures in different countries, because that way you leverage on local knowledge, local understanding, and be able to move things a lot faster. And therefore, I urge the business leaders before me here to convert the opportunity of this forum into concrete investments, joint ventures, and lasting commercial partnerships. I want to tell you that there are opportunities in Kenya, and I can put them down for you. This good man from Standard Bank spoke, for Kenya better than I could. Yeah? On what the opportunities are, on where the momentum is. And therefore, it is very important as we build the infrastructure for the public, we want to make it a public-private partnership. I will give you maybe 2 or 3 examples. We now have a big program on transport and logistics. We're building a new airport. We're investing on a railway to connect Kenya to DRC. We have a big program on road infrastructure, about 28,000 kilometers of road and tarmac. And that is going to cost us anywhere between 10 and 15 billion dollars. These are opportunities. You know, whenever we have opportunities like this, we have Chinese companies and companies from elsewhere. Why not South African companies? We have partnerships. Some of the roads are toll roads. You know, these are investable pieces of infrastructure. You people must find the correct frameworks between the private sector here and the private sector in Kenya to take advantage of these opportunities. We have a program to generate an extra 10,000 megawatts of energy. We have a power purchase agreement. This is an opportunity for investment. South Africa has very deep financial pockets. You can invest some of that money in these pieces of infrastructure. We are very good farmers in South Africa. We are looking for opportunity to do another 2.5 million acres under irrigation. We are investing. We are looking for partners from South Africa to invest. And the paradox sometimes is the private sector is stuck with a lot of money. They don't know what to do with it. On the other side, we are stuck with a lot of public projects and we don't have the money to do them. Just imagine. There is a whole pool of money sitting somewhere. You're looking for opportunities to invest. We are also stuck with projects. We are looking for people to invest. That nexus and connection, it is for you in the private sector to work with us, and that is why, for example, in Kenya, we have set up the National Infrastructure Fund that will now provide an opportunity for the private sector and the public sector to co-invest in projects that are commercially viable, even though they are public projects. These are opportunities for you to look at, and I welcome our good friends in South Africa. You are no longer strangers in Kenya, whether it is APSA, whether it is Stanbic. You people already have networks in Kenya, and we want to work with you so that we can have a win-win outcome. And we will continue to eliminate the barriers that impede trade between our two countries. Let me conclude by saying Kenya remains firmly committed to its investors through reforms that ease doing business, strengthen investor protection, accelerate industrialization, and deepen regional integration. We are investing heavily in agriculture, renewable energy, affordable housing, industrial parks, and the digital economy to stand as a globally competitive destination and the gateway to the wider East and Central Africa. And we want to welcome South Africa to build with us this ecosystem. We also recognize the strategic value of closer collaboration among Africa's financial institutions, development finance institutions, pension funds, sovereign wealth funds, and private equity firms in mobilizing long-term capital. Through our National Infrastructure Fund and the Sovereign Wealth Fund, Kenya is unlocking patient capital for infrastructure, energy, logistics, housing, industry, and opening new avenues for partnership with African investors, including those from this great country. we are equally positioning ourselves as a competitive jurisdiction to domicile funds and cross-border investment structuring. In reforms to our financial ecosystem and regulatory framework, Kenya offers fund managers, private equity, venture capital, and institutional investors a gateway to deploy capital efficiently and across the continent. Let me conclude by saying we have today again provided clarity, especially in the areas that was raised by the private sector here, in the areas of standards. Our two standard bodies, we have both CEOs here. We clarified in a subsequent MOU how we are going to have clarity in standardizing the whole system so that we have equity. We have also agreed on how we are going to work with our institutions of higher learning so that again we can deal with the issue of recognition of qualifications, so that again the skills challenge that the gentleman Chate was talking about, we can again align that so that we can have mutual recognition of qualifications, both in Kenya and South Africa. And again, with President Ramaphosa, we did sign off an MOU today to exactly align ourselves around that. And we will continue to identify with your support and with your partnership areas that are still require some fine-tuning so that we can make it easier for all of us to be partners and to create a much more seamless connectivity between our private sector and also all the other things that help us do better business together. With those many remarks, thank you very much. Welcome to Nairobi. We will keep looking at what opportunities are there. Asante sana.
Thank you very much, ladies and gentlemen. While you are standing, can you please join me in welcoming His Excellency President Cyril Ramaphosa to address this meeting. Thank you.
Let's be seated, please. Program Director, Minister Ronald Lamula, Your Excellency President Ruto, President of the Republic of Kenya, ministers and deputy ministers amongst us, and Mrs. Ruto, who's also gladly joined us, not only for this session, but the entire day. She's been involved in another program with my wife, a much nicer program than what we are doing here. Our wives always know how to choose the best part of everything. Business leaders who are here and our high commissioners, and all of you ladies and gentlemen. I always look forward to engaging with the private sector, and I look forward to it because I enjoy very much the smells that I identify as I walk into any meeting with the private sector. Not perfume, not odor smells, but the smell of money. And now as I stand here, I can see many of you
I can see money. Money is just replete here in this room. A lot of money. So it is indeed a great pleasure, but it is also a greater pleasure to speak after my brother, President Ruto, who spent quite a considerable amount of time with me in a tete-a-tete in the morning, where we traversed a number of issues, and where we could both feel the bond at our level becoming stronger and stronger. And I'd like to thank him for having set aside time to come to South Africa on this visit so that we can strengthen the bonds, of course, not only between us, but also between our two governments and our two nations, and by so doing also strengthening the bonds amongst our two economies. So it is a pleasure to address this Africa-Kenya Business Forum and to welcome the Kenyan delegation to South Africa as well. Your presence here also shows the value that you place on the partnership that has been crafted between South Africa and Kenya. And this is an old partnership. It's also a very strategic partnership, a strategic partnership that has its roots in the past when South Africa or South Africans were fighting for their freedom. It was Kenya, amongst many other nations, that raised its voice to support our freedom when others shunned the struggle that we had waged. Kenya was amongst those that were firm and clear that the people of South Africa must attain their freedom. So to you, President Ruto, we will never stop saying thank you. And to you, the people of Kenya, we will never stop to say thank you for the support that you gave to South Africans to attain their freedom. The freedom we have today, we say thank you to you. This gathering reflects the growing strength in many, many ways of a partnership that is founded on very strong values, mutual trust, and a common vision for our continent's future. It was also pleasing to hear the four business people standing here articulating their wants, their needs, and also articulating their visions about how they would like to see their businesses progress, our economies also growing. It was good to hear all that. There was, however, something that I missed, and President Ruto got close to it. What I missed is what President Ruto I would like us to do in 2 years' time when we hold this business council again in Nairobi. What I'd like to hear the business people coming up to stage, and I don't only want 4, I want as many as possible, coming forward to tell us how everything that they were saying here, they were wishing for here, how and in what way they are going to back it all up with investments. We've all heard the needs and the wish that you are saying about, yes, we'd like to invest more and so forth. I now want shillings and rands. I want to hear about those shillings and rands being invested. My dear brother, President Ruto, earlier this year in March, we held the South Africa Investment Conference, and we've been having these for a number of years now. And we always put a target for the 5-year term of our government to say by this 5-year term we want to have raised so much money. In the last term we had put a target of 1.3 trillion rand, 1.5 trillion rand rather, and we invite businesses to come forward to respond to their quest that we should create a conducive environment for investments to take place. And we invite them to come forward, to come and tell us what they are going to do and what investments they are going to put on the ground. They often come and make commitments. And in the first term, it was way over 1.5 trillion. This year, we started again after a lull, and they committed 890 billion rand. And having seen the enthusiasm that they displayed, I raised the target to 3 trillion rand. I felt that we should be able to reach 3 trillion rand. Are they trying to dose my voice down because I'm talking about money? So we get the businesses to come forward and make their commitments and tell us in what area they're going to invest, how much they're going to invest, and if they are reinvesting in their businesses, they come and make commitments. What I do believe we should now do at the next Business Council that will take place in Nairobi is to tell ourselves that we are now full of speeches. We are tired of hearing speeches. We now want to hear businesses coming to the stage and telling us in what areas they are going to invest and what amount of money they are going to put on the ground in both countries, Kenya and South Africa. In that way, colleagues, we're then going to be more practical. We're going to go beyond the speeches that we make. And on our side, so that you must never think that we're not going to do anything, on our side, we will come forward and tell you in chapter and verse the steps that we are going to take and or will have taken to improve the regulatory environment, to deal with the tariffs issue, to also deal with ensuring that there's manufacturing climate in our own countries, and to ensure that the various institutions that need to take decisions, like in our case, ITEC in South Africa, as we heard earlier, do take decisions. We will come forward and put very practical solutions. And therefore, President Ruto and I are not out of turn in saying we want you to come and present your actual investment commitments and tell us the time frame during which those investments will take place. President Ruto outlined a number of projects that Kenya wants to embark upon. I don't want to extend the time of our meeting by outlining the number of projects that we in South Africa want to embark on. We've been working on a number of reforms that have had to do with our electricity generation, and we've moved our country away from load shedding. The electricity generation has improved increasingly over time, and we haven't had blackouts for almost more than a year. And those are the efforts that government has been taking to make sure that we create a conducive environment for businesses to operate. And similarly, we've been looking at how we improve our logistics, how we improve our water, and how we improve a number of areas. When we visited Kenya in 2022, was it 2023, President Ruto was insistent that we should not leave Kenya without having agreed on a visa-free,
visit to South Africa by business people and by those Kenyans who want to come here on a 90-day basis. We immediately agreed on the spot, and today we are pleased that Kenyans are now able to come to South Africa, and the heavens have not fallen. Because it occurred to me that we were afraid to do something that is so practical, that is so doable, because we were befuddled in our heads about the regulations and this and that, what the law says and all that. And once we unlocked that, we've had a flood of people coming to South Africa on a visa-free basis. 58,000 have already traveled, and many more will come. President Ruto says, well, President Ramaphosa, this has been to the greater benefit of South Africa, that your GDP has now been contributed greatly by the people who come here. Of course, he forgets that the people who come here are largely business people. They are coming to see not only what they can buy, what they can learn, and having seen the very wonderful things we do here, they go back to Kenya and implement those. So your GDP, my dear President, rises maybe even 10 times more than what we can both imagine. So it's great. We were able to implement something that the private sector people were talking about. So on our side, we will then be able to implement some of the issues that we have raised. President Ruto and I, therefore, call upon you at the next Business Council to prepare yourself between now and then. Whether it is Standard Bank, whether it is Nikolai Stavros with the pharmaceutical company, whether it is my two brothers who are sitting here with talking about macadamia and sugar and what have you, and many others, I would want to see you come forward and tell us what investments you're going to make in the two countries, to make sure that we live up to the powerhouses of the two economies. Kenya is a powerhouse in East Africa. South Africa is a powerhouse in Southern Africa. And together, we become a greater powerhouse on our continent. Taking advantage of the Africa Continental Free Trade Area, President Ruto has correctly said, this Africa Continental Free Trade Area gives us all on the African continent an historic and unprecedented opportunity to make sure that we trade with each other, to make sure that we create business opportunities on a free tariff basis. When I know as a businessman that I can go and sell something in Egypt, something that I make in Cameroon, and the movement of what I sell is going to be facilitated by this trade agreement, that should boost my business opportunities. And when we know that, the payment systems are uniquely African and can be utilized for enhancing the businesses. So the Africa Continental Free Trade Area is the best thing after the formation of the AU. It is the best thing that our continent has come up with. It has created the greatest opportunity. The one other great opportunity we created was what Mr. Stavros was talking about earlier, the pharmaceuticals, particularly vaccines. When COVID happened, we were caught almost blindsided. We didn't have vaccine manufacturing facilities in Africa. We fought tooth and nail to allow and to enable African countries to be given that opportunity and to grab the opportunity
to be able to manufacture vaccines. We now have the capability. That is another great opportunity that collectively that we fought for. Kenya was in the lead, South Africa was in the lead, and a number of other countries were in the lead to open space and opportunity for entrepreneurs to come forward and begin to do business, to make money, so that we grow our continent together. So I expect that this forum, building on the success of our meeting that we held in Nairobi when we started this business engagement, will in the future deliver real outcomes that President Ruto spoke about. And the real outcomes must be seeing business people coming to the stage and saying, we are now going to invest X amount in this and that industry. Ladies and gentlemen, that way we will be moving forward with greater determination. We will have gone way beyond just making speeches like I'm doing now on the stage. We will be putting into practice what we dream that Africa should be. Among the outcomes that we seek is a substantial growth in the volume and the value of the trade between our two countries. That's what we want. But we also want to see real investments being put on the ground. Now, we know that since 2022, total trade between South Africa and Kenya has grown by an average of 3.5% a year. We should be at a higher percentage. Kenya remains, in our case, South Africa's largest trading partner on the continent outside the South African Development Community. But we want to see much more trading happening between the two countries that will be mutually beneficial, where the deficit is also brought down, where we find ways and practical ways of bringing down the deficit. Earlier during our talks, we spoke about how, for instance, we should allow more and more Kenyan tea to come into South Africa. And because Kenya had imposed a tariff on our steel, we in South Africa thought that we're going to reciprocate by putting barriers on the tea that should come to South Africa. And earlier today we said, no, let's stop this nonsense. Let's bring down the deficit between us. I mean, it's not comparable that there should be that type of reciprocation. We should not act like some big countries in the world that try to punish, other countries because of a disparity just in tariffs. So we said that must now be removed. We cannot have a reciprocation on steel and tea. Tea that is grown by small-scale farmers in Kenya. And I'm saying to my people, let's have a heart. Let's allow tea from Kenya to come here in South Africa. Now, our country continues to import products, services, and technology and skills from Kenya. Now, we want to see much more. As I said, I'm a tea lover. I want to drink much more tea from Kenya. So South Africa, don't create a barrier for my tea, please. I want my tea to come here. The second outcome that we want is investment, precisely the matter I've been talking about. But it should be investment on both sides. Kenyan companies have invested in a number of projects in South Africa, 11 projects, I'm told, that are worth $283 million US. And South African companies have invested in 96 projects in Kenya, and that represents about $2 billion. It is not only the private sector that has backed our economies at that level. We've also got financial institutions that have contributed a great deal and have funded many of these projects. But I'd like more business people on both sides to be investing more and more. Earlier, President Ruto was saying there is quite a lot of money in the system, pension funds and a number of other sources of money that we should tap into. And what we need a bold private sector. A private sector that has courage, a private sector that is not risk averse, a private sector that partners with government to effect a number of investments. And where government should support, we will support. I mean, we've got institutions like the Development Bank of Southern Africa, has been one of those that has also funded a number of projects in Kenya, and I believe they are funding the Mombasa and Nairobi petroleum and crude oil pipeline. Our development finance institutions are keen to do more to fund a number of catalytic infrastructure projects also in Kenya. As has become evident from this forum, there is huge untapped potential in both our economies. And we cannot just continue looking at those opportunities without embarking on them. And I do believe now that being practical means we must begin the process and speed up the process of investment, because we are gateways to our respective regions, Kenya and South Africa. These two countries have complementarity, and we need to exploit that complementarity. At a political level, we confirmed once again today that we are aligned. We're two countries that are robust democracies. We're two countries that believe in the rule of law. We're two countries that have embraced democracy and our constitutional principles fully. So we are aligned at that level. At an economic level, we've put in place measures of full cooperation, and we now want to see the private sector moving forward to effect investments. Together we possess also an industrial capability as to the two countries. And we also have entrepreneurial talent. And the skills base in both our countries is quite at a high level. We've been able to build sectors of our economy in one of the most impressive ways. In your case, the agricultural sector; in our case, the manufacturing sector, manufacturing auto vehicles and all that. Now, the question before us is not simply how much we admire and feel proud about all these achievements. It is how we put them into practice. It is how we ensure that these actions that we keep talking about do happen. And when they do happen, we need now to be able to measure to what extent have they benefited our people, to what extent have we moved the needle in growing our economies. As we are the powerhouses of the two respective regions on our continent, we should be measured by the number of factories that we have built, the jobs that we have created, and infrastructure that we have delivered, by new markets that we continue to open for the products that are made in our two countries, and by that extent to which African businesses can be made to be champions, not only champions in our two regions, but champions continentally and champions globally. Africa is the origin of humanity. Africa is the origin of talent. And Africa must now play out its capability of being able to showcase its innovation, to also, to you as business people, to be able to say, we are now going to start building real champions of our continent. And champions should not only be from the Northern Hemisphere. We want African champions as well. So discussions that we're having today here and what we have heard should really in the end demonstrate that we have capability and we can move forward as a continent and as businesses. So in our view as government, we expect a lot from you as business, just as you expect a lot from us. And where we tarry and where we slow down, we will encourage you to egg us on, to encourage us. But we would like to see this smell of the money that I've sniffed today being put on the table, being turned into factories, and going beyond just saying we've opened this branch of this bank, this branch of this company and all that. It must now be real. We must see and hear about real investments that are going to be put in place. We want to hear how you are going to create industries of the future and how you are going to become the real engines of our economy's growth. Now, this is the message that I want to leave this business forum with. And my key message is, and I'd like the officials in our government as they put the business gathering together in 2 years' time to work with you to make sure that it results in real investment pledges and commitments that will be made. Otherwise, I am not coming. Otherwise, I'll tell President Ruto that my brother, you and I will meet at the airport and I will come back to Pretoria, and I would like to come to Nairobi to hear real commitments for investments. That is what we call on you as business people to do for our two countries. And with those words, I'd like to thank you for the great effort that you have made in putting this business council together. I look forward to the next one so that we can continue to grow the economies of our two countries. So thank you very much. We thank you for your effort.
Thank you very much, Your Excellencies, for your addresses. I now wish to offer our gratitude to the visiting Kenyan delegation who have had candid conversation with their South African counterparts. To the business people of both countries, we welcome your commitment to constructive dialogue and the solutions that you have offered to take our economic relations on an upward trajectory. It will be remiss of me to end my remarks without inviting you, in particular the Kenyan delegation, to enjoy the best of what the Gauteng province has to offer. In your remaining days in our country, the Kenyan tea and the Kenyan coffee is also in offer in some of our restaurants. The South African wine is also offered. The dynamic nightlife of dancing amapiano. This will be real integration. And I can whisper to you that President Ruto will be leaving tonight. So there will be no protocols that can hold you. Ladies and gentlemen, we have now come to the end of the business forum. I will now invite you to stand as the two heads of state will be taking leave of the room.